And I want to start with Stephanie, who's made some key trades in this space recently. Steph, you tweaked your semi exposure. What brought you into the fold here?
Yeah, sure. So I sold Marvell because I was up over 100%. Same like I did with Teradyne. I think you take profits when you can take them. And then I added Micron because the stock is down about 24% from its highs, and the fundamentals remain amazingly strong. We all know that, but I think it's going to be stronger for longer. When I went through the quarter, and I've been going through the quarter report over the last couple of weeks, and you know, they've signed 16 deals last quarter, 14 of which it gives them $100 billion in RPO, and that's bookings. And I think that that means that the visibility is just so much better as a result. And so I do think the AI trade is certainly not over. I think we're in the third or fourth inning at this point in time, and we are short memory. We are short compute. And that gives this company a lot of pricing power. I don't know if we're going to see the pricing power that we saw last quarter. I mean, they had 60% average selling prices in DRAM and 80% in NAND. But I do think you're going to see ASPs be stronger and just strong in general. And I think this company has about $40 a share in earnings power through the cycle. I also added to Nvidia. We started buying that 2 weeks ago. I just believe that it's lagged so much. It's actually underperforming the group by 53% year to date. It trades at 18 times forward estimates. That's the cheapest it's traded at since 2019. And we know that they dominate the GPU market. I understand there's competition coming, but they will always dominate the GPU market in my mind. And they have new products coming. And this is a company that's growing revenues in the 80s, gross margins in the 70s, and they're going to double their free cash flow between now and next year, end of next year. And so I like that visibility as well. And I think there's a good value there.
Yeah, I saw this interesting stat from Opco this morning, guys, with Micron and Nvidia are the top two contributors to year-over-year earnings growth for the S&P in Q2. If these two companies were excluded, according to Opco, the blended earnings growth rate of the S&P for Q2 would fall to 16.8% from 24.7%. That's a 790 basis point improvement. Joe, I know you own these two as well. Are these must-owns, just given their impact to earnings growth in Q2?
Well, look, I think if you have not owned them, the right perspective to take is you now have a pullback into what is technical support.
Well, you did. Micron's up 10% today.
Right. And you're still sitting above the 100-day moving average. I think the fundamentals are well known about memory, high bandwidth memory, and the universe of AI infrastructure. We know hyperscalers will continue to spend, and they are ultimately going to benefit. I think from a sentiment positioning standpoint, they reached an extreme. They went parabolic, and you needed to work off that overbought type of condition. And I think that's, in fact, what you've done. So if you do not have a position, you have what I would call a low-risk, well-defined point of entry here versus these critical supportive moving averages. If they break down below it, then you can make a strong argument that maybe there was a significant inflection point that was traced out several weeks ago. But I hold them from a core perspective in the ETF. I'm not adding to them here because I do think we've worked off the significant fever. And I think overall, you've seen the momentum factor come down dramatically this month. Okay, one of the worst months for the momentum factor in the last 10 years. And it seems to me you have a little bit of a handoff, and what's saving the market is the performance of the mega cap. It's your Apple, it's your Meta, it's your Amazon. They're performing, Nvidia. They're all performing really well in July, and I think that handoff might continue. So I'm a little bit muted in terms of how I think about positioning. If you're there, stay there. If you're not there, lowest point of reference. Don't get overly excited about a trade that probably saw its most strongest intensity several weeks ago.
Well, I guess the key question too, Josh, is whether this is a factor unwind in terms of momentum and a lot of the AI infrastructure exposure, or a fundamental unwind. This is a question that Wells Fargo was asking this morning. And if it is purely factor-based and positioning-based, do you feel like that unwind is to a point now where it's completely been flushed out?
Well, the market, it doesn't matter what I think, because the market is telling you that they're buying the dip, and they think that most of what went on was technical and not fundamental. That's why the entire AI trade is ripping today. Not just the semis, but all the non-technology companies that have been caught up in this whole AI CapEx build-out theme. They're all up. DRAM's up 10% today. The top performing stocks in the S&P: Ciena, SanDisk, Western Digital, Micron, Intel, AMD, Corning. So it's all one trade. The trade got washed out this month. Joe made a really good point, I think, and we had this handoff underneath the surface of the market that allowed us to not give up too much ground in the S&P at the index level. And the market today is telling you they want to be long these names. Now, why today? This is the thing that nobody's brought up yet. If you're bullish on this theme, you can't not be in these stocks ahead of Google, because what the Google earnings report does for us every quarter is it serves as this sort of like, come on into the revival tent for Brother Love's Traveling Salvation Show. It's the affirmation that everybody needs to hear about the state of CapEx, the forward guide for CapEx, the fact that all these projects are going ahead, maybe even more projects than we thought about 90 days ago, the last time they reported. So like if you're bullish, you need to be in ahead of Google, not sitting on the sideline, because this is arguably the cleanest AI story in the entire market from a hyperscaler perspective. I also think, you know, it's a really healthy tape. The fact that we had these stocks 20, 30% drawdowns, you would have thought, oh no, now the whole market's going to sell off because it lost its leadership. Number one, that didn't happen. And number two, this has been a really helpful reminder for traders. Ain't no such thing as one-way trades. It doesn't exist. The best stocks in the market, the most powerful names, the best earnings stories, they're going to have down days, they're going to have down weeks, or even a down month on the way toward higher prices. We need to get that reminder. If they just go parabolic every single day the market opens, then you're in for a real crash. And fortunately, this is what keeps the market honest. This unwinds some of the leverage. This gets people to actually hit the sell button on some of these 2x ETFs. Like, this is what you need for a longer-term uptrend. So I'm really pleased with the way not only these stocks are rebounding, but the way the overall market is processing what's happening and living through it.
That's a really good point with regard to Alphabet earnings and the timing.
I am very good at this.
Yeah, you got some experience there. Also in kind of the fundamental camp of why we're seeing semiconductor stocks move higher today, you've got Taiwan June export orders that were kind of skyrocketing. TSMC reportedly looking to raise prices 10% next year. That's according to Nikkei. So I guess the question is, given what we've seen in terms of positioning, given some of the fundamental stories that we're digging through today, and Josh's point about Alphabet earnings, do you think these moves hold?
I do. And I think all that's what's transpired thus far, this is a matter of positioning from my standpoint. Obviously, the SOX or the SMH, whichever index you've been on the semi side, have run, to Josh's point, I mean, they've been parabolic runs that we've seen in the first half. And it is healthy to see other sectors participating, like healthcare, financials, industrial, starting to move. And I think to Joe's point, if you're not in there, this is a potential opportunity, because to your point, Leslie, at the top of the show, you know, 48% of earnings growth is going to come from the semiconductor index going forward. So there's clear visibility on what those profits look like. CapEx is not going to slow down. You're going to hear that from Google tomorrow. They'll reaffirm and potentially raise. I think you're going to hear that from most of the hyperscalers. So I think that is not a place to ignore. And this kind of disruption that we've seen over the last couple of weeks, I think, present an opportunity if you're not there.